Hello and welcome to June 21st, August. KR at -7%. It's a move up. Yes, it is. And also, we're running at 10.6 versus 13.1. And yesterday we were at 8.6. So we picked up 2 percentage points in that regard. So here we are. It's KR. You see, we're trying to push back the entry point. And like I said, once we clear out past that entry point up in this full body clears above that entry point, we will then be moving to stop as EP stop. That's entry point stop. And where are my rules? Oh, there they are. So a quick reminder on the rules for this month, and that is, let's go ahead and just put them on the screen there. A quick review. The view of the views of the Elvis shift is that EP stop. Once the candle clears the EP, that's what we're talking about over here. It clears up in here. Then price will take profit. It hits the third ratio, which is way up there at 48.31 for KR. And then we get RI 100. We go last bar low, and we get RI 150 is last bar close. So the price is less than the close of the previous day. We are out of the trade, and we hit 150. Also, too, if we hit the 31st day, actually should change that because it's 31 days. When we hit the 31st day of being in the trade, we go to dipper low. And if we hit 61 days in the trade, then we're going to go to last bar low, and we're not going to be waiting here until the end of the time period. So those are the exit rules in review for the challenge for the STO. Also to the STO is using the strategy of the stochastics rising. That's the basics, the heart of the stochastics, the core center of the stochastic strategy is stochastics is rising, the RSI is rising. We have green histogram, and the 10 EMA is also rising. Now, why the scanner did not find the KR last week was that the day we ran the scanner and it came up with nothing, and yet I saw all the bright conditions, I failed to remember that there's another rule in the scanner, and that rule is that stochastics has to be below STO entry. So what that means is that the stochastics has to be below the 40 value line, so the scanner will pick it up. Why? I'm looking for opportunity that when it dips down here in the turnaround zone, that we're picking it up at the bottom of the current pi cycle to get the best run, to get the better opportunity. And the scanner was correct. I should not have taken this trade, but because I did record it on screen and the trade was sent, I was not going to rescind it for the very reason that that's cherry picking. I mean, granted, I did find an error in that taking the trade because the scanner didn't approve it, but at the same time, I do not want to be cherry picking. Now, notice here, see over here, this would have been back here on that same theory if we take and we extend it to the left. Where was the ideal entry? Right here. Right here where it's under the 40, you can see it right there. And then there is a rise right here at the rise of the EMA, the 10 EMA, and then RSI is in agreement, and we have green histobars. That would have been the perfect entry for this trade back on May 28th. And then the third ratio would have been somewhere in here. We still probably would not have reached the third ratio. We probably would still be in this trade. But those are the setup rules for June for this for the strategy for stochastics on the alpha account. Let's go on now to Capri. At Capri, Capri is also in a similar situation. It has not cleared its entry point at $55. And there I drew it on line. There is a 40 line right there. So this essentially is going is would be setting up for an additional, if I wanted to, compound the trade, ESOT trade. When you compound a trade on the same instrument, CPRI being the example, and you're using the same strategy as it is here, this dip below the 40, that qualifies. We're now waiting for the uptrend on the EMA. We already have uptrend on the RSI. We're still waiting for a green histogram here. We would then can add another trade on top of it, and that's called pyramiding. Fortunately, my experience with pyramiding has not been the greatest. Won some and lost a few, so I rather not pyramid and just let the trade play for itself, and then add and keep that allocation of money onto other trades. I am now listening to Market Wizards by Jack Swigert, uh, written around 19. I think 1997, 1998, I'm not if I'm mistaken. And the guy named uh, Clover, I believe, was the trader. And he's one of those that uh, wants that confirmation and uh, will get out of a trade if it turns quickly against them. So tight stops. Remember the first Market Wizard books that I listened to, Unknown Market Wizards. I went 4 passes. The ultimate bottom line is once the trade gets going and it's not going in direction, get out. Once it's going in direction, find a protective stop, a reasonable protective stop to preserve capital. Without capital, there's no game. As you can see, we have $5,154 available in buying power here in the alphas. So that takes us to scanner runtime. Let's go on to scanner runtime. And here's our scanner. Now this is the core right there. That's the core. And the core is very simple. If those who really want to get who are interested in getting into this, the core is very simple. And that is what I said earlier. Now the core does not use the EMA. The core is stochastics, RSI, MACD, and stochastics exponential. So, oh yeah. So this is the core for the stochastics, and we got a little bit of time. Let's go ahead. So if the core was running today on the alpha, what would it produce? Let's go ahead and close this up. And right there, look, we would have 21 candidates under the core rules. But now we're going to switch to the standard, that's the strategy for this month, and that is the uptrend strategy. And that includes that action of the prices is in correlation with the EMA. So again, we lost the alphas. We had 21 in the core. Now we're going to the third evolution. And RTX is on the screen. We will be looking at RTX. Yes. So we're going to right click, come down here, send the red, and then come here, and we're going to go auto, and then we're going to zoom in 1, 2, 3, 4, right about there. And there it is. There it is. Look, the value actually was, the scanner picked up at 41. But there's our dipper right there. There's our uptrend right there. And yes, we'll be setting up this trade for that. There's our potential setup right there. In at 88.15 thereabouts. I'll have to get the final numbers. We go get stopped out at 85.60. I'll round that off. And then our target would be 95.69. Now we would have to quickly go over to, in the closing minutes, go over to the trade and then look at the options. And the options have to be in more than 90 days. That's one criteria. The next criteria has to have more than 5,000 open interest. That complies. Now, are we within 10%? Sure enough, right there is 10%. Our account is it's a $6.611. So we will be looking here at this right there. There's our option for the trade coming up for Raytheon, and it would be, and this is 355. That would make it $7. That would be past our 10% on the allocation rules. So we will be doing one contract on 355. And that said, let's go ahead and run the scan for the downside in the closing seconds to see if there's anything on the downside. And there's Stochastic downside. There's the alphas. Let's run the scanner. And nothing for the downside. So we'll be looking at Raytheon setup for tomorrow and see how much Raytheon owes us. Raytheon owes $6.71. It won this last trade. With that, I said good night and thank you very much for checking it out.